Alright, traders out there in Traderland, my name's Des here at Grok Trade on Monday, March 5th, 2012. And just as expected, market's breaking down a little bit here. I hedged myself going into the weekend because I saw this being a potential, or the drop in the markets being a potential possibility here. You had the Dow down just a fraction, the S&P down 0.4%, NASDAQ down 0.9%, but small caps, get this, in the face of technology, up 0.15%. And you have the banks actually in positive territory. VIX, though, up almost 4.5%. We're over 18 right now. Gold down 0.4%. And you have silver down a whopping 2.2%. Crude oil up 0.5%. US dollar basically at break even. What you have here, the S&P heading higher, 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 and higher. And for the first time in several sessions, we get a close right here below the 8 EMA. Last time that happened, well, was back here on February 15th. And then the time after that puts us around here at the beginning of January, or the end, last part of January. Today, we almost made it down to the 20-day moving average, simple moving average. And you'll see that last time we were that close brings us all the way back to around the latter part of December. We have just been on tear going straight up. So right now we have this rolling over. You see these swing highs, and then we have these swing highs, and we come across and big bearish divergence. Still intact, but today we close below a major trend line, and that major trend line being having a close below that is like a crack in the ice. At this moment, I mean, we could bounce up here a little bit, but because we're still staying above that 11 EMA, which is pretty important to me. But the bottom line is we are starting to roll over, and we have relative weakness taking place. So the only real big benefit we have going is the banks in positive territory. That needs to remain for the markets to get strong. But I think that we have a decent chance of the market starting to drop here. Again, it's been 40 to 45 days or so, trading days, since we've had even a 1% correction in the markets. So the markets have been extremely strong. And to say we're going to go bearish right now would just be folly, because there's nothing saying that we are in anything but an uptrend. However, what I am saying is the markets are in fact rolling over, and we're seeing some leakage in the boat. So we're taking on water, and if the markets are going to give us a sizable correction, I'd be watching the 20-day moving average like a hawk. The first sign will be a break of the 11 EMA. So this is a perfect time to be doing hedging, and that's hedging just means protect your capital. A lot of you have longs out there, and I applaud that, but you need to protect all those winnings and profits that you have. Best way to do that is either go flat the market, that means sell everything. But if you want to still be in the hunt, another very savvy way is hedging yourself. So I would check out the website, teachmetehedge.com. We were going to do a hedging seminar this Wednesday, and it looks like most people are deciding to buy the online version, which is $97 at teachmetehedge.com, opposed to doing the $147 live one, which I don't blame you. That is a much better deal. So teachmetehedge.com, check it out, get that, watch it 2 or 3 times, learn how to hedge and administer those new techniques on your portfolios today. Take care, and very safe trading to you.